Welcome to the Collective Genius Podcast, the show for real estate investors who are looking to scale.
Welcome into the Collective Genius Podcast, the podcast where real estate investors come to grow and scale their businesses. I am so excited to introduce our guest this week. I even wrote this down because I want to make sure I do our guest this week justice. I went to your Instagram, Eddie, and I got to this, and I think it's perfect. It starts with husband, father, entrepreneur, mentor, author, and founder of NoteSchool. Please welcome in longtime Collective Genius guest, Mr. Eddie Speed. How are you, my friend?
I'm great. How are you?
I could not be better. As I said to you pre-show, if I get an opportunity to spend 60, 70 minutes and have a conversation with Eddie, I'm having a great day. So thank you for joining me today.
Oh, I'm so glad to be here. And likewise, Leon, I'm your number one fan.
I appreciate it. You've always let me know that from the day that I came back on this side 7 years ago. And I appreciate you and know that the feeling is mutual. And I'm excited that people get to learn today what I know about you beyond being a very knowledgeable real estate investor. One of the OGs, and I mean that in the nicest, most complimentary way. One of the true OGs in this business. And when I say longtime CG member, I don't know if I've had anybody on the pod yet that's been in this Collective Genius community longer than you. So let's start with this. So we give you a proper introduction, Eddie. What it is that you do specifically, because you do something different than a lot of our core audience, and
Right.
then where you operate out of. And let's just start with that proper introduction of what you do.
So I really have two businesses, Leon. I have a training business called NoteSchool, and I train essentially two audiences. I train people to buy notes. And those are sort of the Ritz-Carlton audience people. They don't want to go work in the business every day. They just want to buy notes. And so I have doctors and high-end realtors and business owners, and I teach them how to buy notes. And on the other side of the business, I teach people how to create notes, how to create good notes in the marketplace that sell for the most money. What I call, and this would be seller financing and doing it at its most successful level. So I have this training business, and I train people how to do these businesses, right? Then I have a note buying business called Colonial Funding Group, and we are in the business of buying seller finance notes. In fact, over the past 45 years, I've bought 50,000 seller finance notes.
So for the real estate investor that hasn't been in the note business, and let's face it, we have over 500 members. There's only a few that specialize in note buying, and I would say a very, very few. So if you could give some more context to that, let's say for the real estate investor of teaching them how, give me a Cliff Notes version of what that looks like, just to give some for those that don't understand quite the note business.
So our growing audience today, which we believe is substantial growth, is filling a big industry gap. And the industry gap today is people with rent houses are not making the money they used to make. So we're showing them how to take their rent house and do something different with their rent house and convert that rent house to a seller finance transaction. And that can be true, Leon, with an existing rent house that you've owned for years, or that could be true with the next BRRRR that you do. Right? The next BRRRR transaction, instead of doing a BRRRR, wait a minute, don't rent it, seller finance it. And we show people how to do that. And then the next step is they say, well, Eddie, wait a minute, I need some liquidity. I got to have enough money to pay off my existing mortgage, or I've got a cost basis in the house and I need to figure out. So we show people how to create a note that part of that financing, maybe all of it, but also possibly part of that financing could be immediately sold in the secondary market. And because we've helped you create a really good note, that note is going to bring top dollar in the market.
So that piece of it, I think, is new that I've heard from you over, there's many things that I've heard from you over the past, but I would think that the most frequent messaging that I've heard from investors are those investors that also lend on properties, meaning that they're also hard money lenders and they're taking those notes and then selling those notes. That's something that you've helped investors with in the past as well, correct?
Yeah, I mean, you got to remember 45 years and, lots of transactions. I've done a lot of different things, but we looked into the marketplace, Leon, and we said, who is the audience that is the underserved audience in the market? And what we basically figured out, Leon, is there are a lot of landlords that are not, the modeling isn't working the way it did in the past. And we said, oh, wait, but we could show you how to drastically change your cash flow and your yield on a property, just doing it slightly different than how you're looking at it right now. In fact, we've worked with fractional CFOs and people that have a lot of clients that have this problem. And so it's market timing, Leon.
Sure.
All these things change, and notes have become more in my humble opinion, notes have become more profitable today than other strategies like rent houses. And I just show your CG folks how to be in the seller finance business, but do it in a probably a little different way than maybe they traditionally have thought about it.
So we're going to dive into that a little bit deeper, but what I want to make sure that before we get too far into this is, anytime that I've done these pods, it's very important to me that the audience understands, the membership base and who you are and why you're qualified to speak about these things and the most qualified person to speak about these things. So before we get too far into that, I want to just go down the journey a little bit and learn a little bit more about Eddie Speed. And I will tell the audience, moving forward, our guest will continue to bring value to these pods. And so, Eddie, stay tuned because Eddie's got something that he's going to give away here today for the audience that, when you learn more about what he's got to offer here today, you will be very interested in this. So I want to make sure that I plug that. But before we get too deep into that, Eddie, I know you. I know your story. I know you've been in this game since 1980. When some of us were maybe not quite in diapers still, but close to it. How did this journey start? I'm sure you didn't go to school to be in the note business.
I did not. I was a cowboy, Leon, as you well know. And I grew up in a cattle auction barn in my hometown of Jackson, Mississippi. And when I got out of high school, I moved to Fort Worth, Texas. And actually, I went through a very specialized ranch management program that's offered at TCU. And if you have a deep agricultural background, you're like, oh, Eddie went through the ranch management program at TCU. They only take 35 students a year. And it's kind of like well known. And I thought my life was going to be in the cattle and ranching business. And along came the economy. And interest rates were 18 and 20%. And basically, I couldn't find ranchers making money. And so I thought my life in doing that was very different because I wasn't born with a silver spoon in my mouth. And so I didn't have a big ranch to go home to. And it caused me to reposition my life. And so I moved back to Mississippi and was really kind of doing something different for a little bit. And I stumbled into this guy. I stumbled into him because he had a daughter named Martha, who I'm now married to for 43 years. But anyway, he was a pioneer in this business of buying seller finance notes. Fireman, real estate investor, did all this stuff. Had the millionaire next door real estate portfolio. And he had switched from chasing rentals to doing notes because of the economy in 1980. Guess what? Inflation had a big impact in why he repositioned how his business worked. And so as a result of that, I didn't know anything, Leon. I laugh and tell people I thought a loan was being by myself, right? Like I knew nothing. But, I was coachable. I tell you what I really had, Leon. It wasn't brilliance, and you know that to be a truth. What I really had was tenacity. And I was willing to go be a scrapper and go chase the deals. He had the money and the knowledge, and I had the hustle. That's really that was the truth of it. And I started in the business, and after a couple of years, Martha and I had married, and we moved to Dallas-Fort Worth. And so we just moved what had become a note buying business, moved it from Mississippi to a bigger market, which was Dallas-Fort Worth. And that's where we've raised our family and lived for all these years.
So you start out hustling, but I mean, most people that are hustling, you've probably heard of this industry before. Like I think about some of the people in the last 5 to 10 years that have grown a pretty significant real estate business, started out wholesaling and flipping and growing rental portfolios, type of thing. Was note buying a big thing back then?
No, nobody knew about it. Nobody knew about it. First of all, there wasn't social media. No, not many people know about buying notes today. Most people that talk about notes, like most of your audience has some concept of doing notes. I just think we can take them to a different level of how they might do notes, right? But back then, nobody knew this. There wasn't social media, right? And I just stumbled in, and he sits down at the kitchen table and starts telling me about buying notes and telling me how it works. And then he said, well, if you're interested in learning more, be at my office at 6 a.m. the next morning. And knowing him, that wasn't surprising. And I was at his office at 6 a.m. the next morning, and the one thing led to another. I built a school because I realized how efficient it would be if somebody didn't have the learning path I had. The learning path I had wasn't very fun. Because they didn't have any training. It's just sit down across from the office and here's how it works. So go back there and throw a loan file at you and go through these documents. So I built a school because I realized how much easier it would be for somebody to do the business if they had a school. But I only built the school 20 years after I'd been doing the business. I'll tell you one thing that drastically influenced me. And that is, I met a guy I started in 1980. Martha and I married and moved to Texas in 82 buying notes. And so towards the end of the 80s, call it 87, I met the guy that found HomeVestors, and I bought notes from him. And we became friends, and he called me a few years later and says, hey, I'm going to form this franchise, and we're going to do this, and I need a note guy. And I think you're the guy. And once again, he pushed me into things that I wouldn't have been comfortable doing. Like we developed a whole system for somebody to follow to create notes. And now that's kind of the theme song and part of what we're going to help people learn how to do. And, that can want to do this podcast is we now teach that. But back then that was like, nobody had done that in our business. In the note buying business, tell me up front the recipe of how to make the perfect note so I can go create it. Like that was like, we were the first guys to come up with that. And so he sort of took me kicking and screaming a little bit into some things that the industry just hadn't thought about yet. And so there's things but you stop and look, Leon, across the industry, and you say, and Eddie, you've come up with different ideas and different innovations. Let me say this, Leon, about every person that listens to this podcast. The only thing constant is change. And I will tell you that if you think I've done the same exact thing for 45 years and I haven't had to adjust, well, that would be craziness, because there's no market condition, no circumstance that is going to stay the same except for a window of time. That could be 5 years, it could be 8 years, but it's going to change. And the one thing I've learned as really just being an entrepreneur, period, is that when the market says you have to change, don't fight market timing, because that will clobber you. And I've tried that before, Leon.
So out of the gates, when you start this school, obviously you have this relationship with home investors. As you start this school, I'm sure it's evolved, as you've just mentioned, change is inevitable. When you start this, what are people that are currently investing in real estate, not the Ritz-Carlton person? What are the people that are coming to you that are investors? What do they want to learn from you? That'll give some perspective for those that, as we set this up for what your give is here today, what did they want and what do they want today?
Well, the biggest problem is if we let's just focus on rental properties for a moment, right? Which is a big theme within the Collective Genius audience.
Of course.
And I've been in Collective Genius since about 2011 or something. So a long time. And I've seen a lot of cycles, but this really became a thing this is how we're going to grow wealth. In 2018, Leon, and I'm going to pick the middle of the market. We're not talking about California. We're not talking about Akron, Ohio, right? We're talking about the middle of the market. Most people in Collective Genius were buying a rent house, and literally you could go take fair market value of the house, not even if they bought it at a discount, but fair market value of the house. And after you paid all the expenses, now this is before you pay the bank, okay? But after they paid all the expenses, they're making about 8% on that house per year. And we call it a capitalization rate, right? And they're making an 8 cap, right? That was a gold standard that Leon, you and I saw, and it was like most anybody in real estate could make that math work. Wait a minute. You look at a house in 2005, the identical house is making 4. It was making 8. It's now making 4. What happened? And what really happened, and by the way, I've had some coaching from some market geniuses in that area, like Marcus Krigler's, right? So it helped me figure out, like when I'm describing the problem, because a lot of times when you tell some people they have a problem and you don't have an explanation for it, it's hard for them to translate. And what happened was inflation. Expenses surpassed the increase in expenses way surpassed the increase in rents. And so this all of a sudden changed the game. So wait a minute. Does that mean everything's out and everything's bad? No, it just means that possibly there's an opportunity with a different way to look at the same market. Leon, you own a rent house. Okay? It's a good house in a good neighborhood, and it's been good to you. It went up in value, right? It's been very good to you. But all of a sudden, you're not satisfied anymore looking at a 4% rate. What if I could show you, Leon, how to take the identical house and reposition what you do with it? And instead of making it a rental, you seller finance the same house and you go from a 4% interest per year, a 4 cap, to now you're making 10 to 11 on the same house. Are you interested?
Well, I don't think anyone would say no to that, Eddie. And that I believe is some of what you're sharing here with us today. So let's just jump into it. Let's go into the resources that you're going to provide, just so everyone knows. Eddie's going to provide us with a website here at the end. So all the resources that he's going to speak to today, he's going to provide at the end of this show. So you'll have it. So everything he talks about, don't worry about the notes here. We're going to have them for you, the URL that you can go to.
All right. First of all, big disclaimer, Leon. You own 50 rent houses, right? Every rent house are you going to make a change with? Probably not.
Okay. I like where this is going. I'm a good example of this, Eddie. To just use me for this. Because
I know you are. I know.
I have about, let's call it 60.
Okay. So, Leon, I know you and I have been long friends, and I kind of know a little your story, and I think you very much represent people in Collective Genius. Now, you run Collective Genius on a daily basis, but you also have been active in the business. You're not just some guy running a mastermind that doesn't do it. You do it, and I know that to be a truth. What I'm going to say to you is, let's take all the emotion out of it. You agree with that? Sometimes we get emotional about our investments, right? And you know me, I can be that way. I can be highly guilty of that. First of all, let me give you a spreadsheet. and the spreadsheet takes all the emotion out of it. You just enter in some variables as it exists right now as a rental. Fair market value, what it rents for, what percentage of rents that you're really keeping, and what goes out to expenses. Most people think that the gold standard day is about 50%, right? I find a lot of landlords don't actually know their numbers. And so you got to really know your numbers. But Marcus Krigler says he would be shocked if you're netting more than 50%.
I would be too.
Okay. So you put all that in there, including what your basis is, and this spreadsheet then builds out, helping you look at what you're making as a rental. And then more importantly, it models what if you sell or finance the same house. And it gives you a sense, including, Leon, if you choose to sell part of your financing that you create. So if you created financing and it's throwing off $2,000 a month as the lender, what if you wanted to sell $1,200 a month of that payment? And it models it and shows you how much money it would be. And what I'm going to challenge to you is that you're definitely going to find, of your 60 rentals, you're going to find some that are going to hold their hand way high. Oh man, that's way better. And I'll bet you, Leon, it would crush the next BRRRR that you try. So it is an alternative to doing the BRRRR. And once again, it is because of the fact that the income on rentals has gone down and the income on notes has gone up. Well, let me ask you a question, Leon.
Yeah.
Well, let me ask you a question. Do you agree that my thesis of 4% cap rate is a real number? I mean, is that kind of a real thing?
It is. And for those that know their numbers with their rental properties, I think that it's a very accurate average probably right now for most.
Who's making more money on a rental today? The landlord or the bank?
The bank, easily, consistently.
Okay, well then wait a minute. Why are we challenging the bank being more profitable? You could easily switch over and move seats from being the landlord to a bank. And by the way, we're going to be able to charge a higher interest rate than what the bank charges you on a rental. The bank charges you about 7.5% today on a rental. Call it average, right? And I know, and people say, yeah, Eddie, but rates are going to go down. And like, okay, I'm not saying that's crazy thinking. Rates go down. Our rates go down below 4%, because if your rent house is making 4 and you're paying the bank more than that, you probably need to pull out the pencil and start figuring out, what does this mean to me? And once again, nobody did anything wrong. This is just what I've experienced, and Leon, what you've experienced is what happened when the market changes. And so the thing is, I'm the biggest advocate of CG of probably almost anybody in CG. And because I tell you one thing, whether it's Jason Medley or you or any of the guys that are leading the way, the theme of CG is don't be scared to pivot when the market tells you to. That is the genius that you guys, it's the truth that you keep speaking over and over. And this is just a pivot.
So this particular pivot, let's dive a little bit deeper.
All right.
Challenge the BRRRR strategy. And obviously, the spreadsheet that you just mentioned is going to be available on the URL that we give later. And so that'll, take, like you said, take the emotion out of it. But let's challenge and say, all in, just for round numbers, someone purchases a property and they're all in for $100,000. It's rent ready at $100,000. They're going to pay 7.5%, let's call it 8% interest, which is probably today is probably that higher number. How do you challenge with this strategy without showing all the diagram? Obviously, that's from a verbal. How do you challenge it?
Well, if you're in Collective Genius, the odds are you have some discount in that rental, right? You're not a consumer buyer. You're an active player in the market. And so you probably have 100 in it, but the house is worth 130. I'm just making up a number.
That's a fair number, and it probably rents for $1,300, let's call it.
All right. So if you have a discount in the property, seller financing even works better. Now, the way that, because if you said, well, now I'm got a little better than a 4 cap, Eddie, because I have a discount in the property and my cost basis is less than what the house is worth. So now, Eddie, I'm earning a 6 cap. Okay, well, then you're seller financing and you're earning a 14 cap. Same discount. It's just a different method to get to the fact that when you say, well, when I seller finance it, what kind of an interest rate am I going to get? Throw a dart, about 10%. And you say, 10%? Eddie, people are getting Fannie Mae loans right now at 6.5%. That's true. And did you know that 40% of the loan origination industry are non-QM loans? And those rates are not Fannie Mae rates. So we're not talking about financing somebody that is an unrealistic market condition. This is a market condition. And so, once again, you may do it at 9, you may do it at 10.5, depending on certain variables, and there's definitions behind all that. But the point being is that it is simply that the banks are charging more interest today than landlords are netting on income. And so that's the meter that starts making me investigate this. This is when I started thinking about this. Like, wait a minute, is it possible that a landlord could shift over to financing and make more money? And when I start running the math, and I'm like, oh my God, they can. The normal number today is that if you're before debt service, before the bank, Leon, you're going to net 2.5 times more income being the bank than you are a landlord. Now you're saying, okay, but I'm going to use leverage at the bank. Well, I'm going to show you how to use leverage in notes too. Like if I can show you the same thing that you can do with a rental, which is use a leveraging technique, and I can show you a leveraging technique with notes, then all of a sudden I pretty much leveled up the playing field, and it becomes like, when is it the rental's better? Now, let me say this. I'm fired up about the new bill. I got it, and we're going to get some things back. And so I'm not saying that nobody ever does a rental. But what I will say is, Leon, you know from experience and being in the seat you sat in, cash flow becomes a big deal too. Mm-hmm. And it's a great diversification to drastically change your cash flow.
So if I'm speaking, as I'm listening to you, Eddie, and this is even more so from the materials that I've read that you sent pre-show, as I'm listening to you, this is speaking to the investor and all, but specifically right now, over the last 2 years, call it 3, because of interest rate changes in spring of 22, the last 3 years, those wealth building rental investors, including myself, we have been selling off the dogs, and we have not been holding as much. Why? The market, current market condition in a traditional sense has not allowed us to continue to build wealth. I hear this and I think of the investor that says, hey, I still want to be able to build cash flow, to build wealth, maybe not assets, but this is speaking, as I'm thinking about all the people I've talked to about, I'm just holding off on rentals until interest rates change. This sounds like a play for those individuals. Am I nuts by saying that?
I think if rentals are in your game, or rentals are a game that you're holding off on because you don't like the math, I think either party that this alternative becomes really good. And and I don't want to use too many cliches, but I asked you a question a while ago: who's making more money, the landlord or the bank? And you quickly answered, "Whoa,
yes."
Well, wait a minute. If that's true, then is there a way, just philosophically, just, as our friend Frank Kern says, right? Dispel your disbelief, right? Dispel your disbelief for a minute. Is it profitable to be the bank, and can I be the bank? And that's, Leon, this is how I've bought 50,000 notes, is because I've been pretty good at showing real estate investors how to be the bank in the right way. And just because I buy part of your note, you're still keeping some income from it. And by the way, that last I checked, the tallest building in most every city is what?
A bank.
It's the
Yeah. So there's a ton of resources that you showed me there. Can you speak to the package of what you'll have at that NoteSchool website that you have for us?
Well, and once again, that's just a starting. If somebody wants more, we can take them deeper. We don't want to just barrage them with too much. We've got a white paper that's kind of it's a thesis of an actual rental. And we picked the middle of the country asset. You'll appreciate this. We picked Springfield, Missouri.
Okay.
So we didn't pick the hottest market. We didn't pick the coldest market. We tried to be very realistic. In fact, the number that we ran on this house, it actually makes almost a 4.5 cap. So we didn't pick the lowest number we could find. But we're just trying to say that the math is going to be what it kind of is, and there's a process to it. So it's not too hard to read. It's a quick read. And then all of a sudden we have a little tutorial on there and we show you how to use this spreadsheet a little bit. Show you how to use the spreadsheet so that you only enter in 5 pieces of information. And then it does that. And then I think we just say, hey guys, how can we help you? It's not some pushy deal that we're trying to we're just saying, how can we serve you? And what we then behind the scenes are building is an infrastructure where if you want to seller finance, we can give you various vendors that can do a lot of this, Leon, that you don't have to go build in your back office to go do. Because a lot of people, and I know a lot of CG guys, right? A lot of people in CG, they have a dispo operation, but that dispo operation is not tailored to go create seller financing. So there are some things that possibly are efficient. If you like it, do it. These aren't my companies, by the way. These are just vendors I went and sourced and found that could help us with things. And all of a sudden it could create some real mechanization to us. The end of the day, Leon, here's what we're looking for. For me to help you the most, I have to coach you into creating seller financing that makes you look like a mortgage banker. I don't want you to look homemade. Contract for deeds aren't cute. I'm gonna hurt somebody's feelings today, but I'm telling you right now that if you're me and you're a specialist in trading a lot of seller financing, which I have and do, contract for deeds are not the gold standard. Right? So there's just little things that we're going to teach you how to do and why it's a truth. So you're not just doing it because we tell you to do it. We're doing it because we're explaining to you why. And then all of a sudden, we're going to help you with how to find a customer. It could be your existing tenant. It could be a new tenant that is a new buyer. You're going to sell your property to your existing tenant, or you're going to sell to a new buyer. And you're saying, who's left behind? Let me tell you how many people are left behind by conventional mortgage lending standards today. So Mortgage Bankers Association generates this index. It's called the Mortgage Credit Availability Index. The day before the virus started, Leon, it was at 185. Today it's at 95. Eddie, are you saying that 50% of the people that could have gotten a Fannie Freddie loan before the virus can't get one today? Yeah. So there's a big opportunity to go find an underserved market and do make sense lending practices to help those people with home ownership. And by the way, you get to help them too, Leon.
I think this is a super important point that I don't want to gloss over. This is summer of 2025, and as we sit here in 2025, the market, especially market for dispositions or retail sales for retail flips or those properties that you're cleaning out and putting on the MLS, has done what? It has slowed down. Not in every, it is very regionalized, but that is an issue that we continue to hear on a weekly basis. And what we're building out our quarterly events for the year of 2025 is the days of multiple offers that you had in 2020, 2021, and even into 22. Those days are just, as you mentioned at the start of this podcast, it's just the market condition has changed. And the evolution, especially for the younger investor right now, is tough. Why? They haven't had to adjust before. Anybody that's been in the game for a long period of time understands that 5 to 8 year rule that you were talking about before. It's inevitable that you're going to have change. And so I don't want to gloss over that point that you just said right there. There are X amount of people, which is substantially more today than it was in 2020, of people that want to buy your properties but cannot get traditional financing. That's what you're saying, correct? There is a group
underserved market. Yes. And it's not because they have bad credit, Leon. It's because of the way they earn income. Or it's some other standard like that. Like think about it, like they're bonused or they're commissioned or they're self-employed. Like there's people that you and I know. Look at CG. CG is full of a bunch of self-employed people, right? I mean, like you and I can relate, look at it and say, like, man, I know what that's like. So understand we are seeing that market. And the other thing I would say to you is this. When people were flipping houses to investors, which were hedge funds, all the way to people buying houses for rentals, that was because everybody was fighting to go buy the next rental. Now all of a sudden the market's not fighting to go buy the next rental, and so as you've said, that market has evaporated, not totally, but noticeably.
A lot less.
Okay, so now all of a sudden, wait, who should I be selling to? An investor or a consumer? Now you're selling to a consumer, but you have a different offer than anybody else in the market has.
Mm-hmm. So days on the market have gone up. There is an underserved group of buyers. And I encourage, if you're listening to this show and you're an investor that really hasn't gone down this creative side of selling properties, now's the time. Like, again, this knowledge, it's like your utility belt. Right? You may not have to pull it out all the time, but this knowledge was something that you'll never lose. And I do think it's important that you have it when the conditions of the market change to this point. And that stat that Eddie gave you before, I think is super crucial of how many opportunities there are to sell on seller financing versus putting that house on the MLS. And if you do, there's always a button that you can check that says that you can get creative with seller financing on that asset. And guess how many calls, I know it from experience, Eddie, how many calls you get from agents saying, I've got someone perfect for this either lease option or seller finance deal. You will get a tremendous amount of calls from agents because they're looking, because they have clients that right now that they want to do more deals, but they're not qualified.
Yeah, the agents are excited about it. So can I give you like a real nugget here?
Well, yeah.
So I've got decades of helping people create seller financing. So the most common question is, how do I start out and how do I advertise? Okay. Right? Don't run a junk ad. Don't put in your ad, no banks required. Don't say things that make people with very substandard credit qualifications call you. That's just going to blow your phone up with the wrong people and give them false expectations. In fact, I don't even put seller financing in the ad anymore. And so here's the little ad that will make a big difference. Private financing for deserving buyers with large down. it will drastically change the demographic of who calls you.
Here's the other piece of that, and I thank you for that nugget. As you were saying that, all I could think about is before I moved to Florida, I officed out of a big Keller Williams office, and I just remember all the opportunities that investors had to come in and teach, especially buyer's agents. Buyer's agents have people that are not qualified that they want to get commissioned off of, that they need for those clients to have another opportunity that is not traditional bank financing, or just wait and they want the commission. They want to help that person get into a house. As you mentioned earlier, you're also helping people get into a home. There's opportunities once you learn this to educate your market, right? So if you don't have that house that's sitting on the market for 90, 120, 180 days, like we're hearing today, the number one challenge that I'm hearing, and this is just, if you take all the things that investors are dealing with in today's marketplace, the number one thing is, hey, we're still fine. It's just slowed down a little bit, to which I call normalization, right? What we saw in 2020, 2021, that's not real. That's the market condition at that time, but we know that's not sustainable. What we're seeing now is you have to go back and do all the extra things that you didn't do before. You have to have the nicest house on the block, or in this particular case, another way to attract more qualified buyers that just may not be qualified in a traditional sense.
I like it.
Yes. All right. Anything else that we should know about the resources? And by the way, I've buried this and continue to bury this because I want to make sure that you got as much of this to understand why you would need to go there. We have enough of that now. It's noteschool.com/CG. noteschool.com/CG. All your resources, everything that Eddie's talked about here today and we'll continue to talk about, is there. We'll put that in the show notes, and I'll make sure that we get it on the outro as well. Anything else in there that they need to know about?
Well, I think there's going to be an emphasis when we talk about it is how much easier it is to own a note than own a rental. Time matters, and let's be honest about it, Leon, brain damage matters. Mm-hmm. And I always say that you can own 55 rentals or 1,000 notes, the same amount of work. And so I think that's another factor is because the key to CG's theme is being scalable, right? Mm-hmm. And and owning a note is way more scalable than owning rentals.
Well, those resources I know, Will, if you've not started down this path and you're just starting out, or you have maybe in the past and you just quit and because the market you didn't need it at that time, now's the time. So that resource is available to you there. Eddie, before we get out of here, I got to know a couple other things here. I know your superpower. I think one of them is a deal architect. What would you say is your superpower, humbly?
I was listening to an old interview with Kenny Rogers.
Wow, the gambler. And
I was listening to him. This is just one of these things that you see on the, and I thought he said something that's true. He said most songwriters have the urge to go find the next song. And I was literally thinking to myself, I have the urge to find the next thing that you could do with financing. It's just instinctively in me. It's not work. It's that the market changes and I go find the next void in the market that you could do. And I will say this, I'm a industry guy, and I always try to say that our creative financing has to be good for everybody. Creative financing is not some trickery deal or some lying to somebody, and that's not what creative financing should be. I'm not saying it's never been done. I'm saying that's not what good operators do. Yes, I've done a lot of creative financing in a lot of different ways, but it is, first of all, I like doing it. It's not so hard for me to see the next transition now because I've have so much of a background of thinking about it. So I tend to see things a little quicker now than I used to. And I do like doing it. And I'm just saying that always my heart is to do creative financing responsibly and do it in a way that's good for the business.
And that superpower is one that I think translates very well to the collective genius. We are always, again, we say this quite often, that we're always looking at where the market is going and not where it is. We're trying to, figure out where the puck's going, not where it is right now. And I would be remiss if I didn't ask you about your journey here in the collective genius. I mean, you are one of the longest tenured members that we've had, 14 years strong. I think you've been in the group 13 of those 14. Yeah, obviously that fits because you are someone that's always coming up with new innovations with the things that you're doing on a daily basis. Tell me your experience. I mean, you've seen a lot of. I've been associated for 10 years. You've been around for 13. Tell me what it is that why you continue to come and the value of the group.
Well, first of all, every company starts out with great leadership. And I would say that without exception, CG has incredible leadership. Leon, you're a significant part of that. And I'm saying that with all my heart. You guys are tireless. You're so professional. When you get to a CG event, it is going to be tight. It is going to be very focused, very clear, very homogenous of putting different people up there that tie together, that serve different needs. And you guys the support you get behind the scene is absolutely incredible. And I'm going to tell you why all of that is true. And that is the leadership absolutely cares about its members. And I would tell you that you say, what has kept you around so long? And that is, I'm not really in the house buying business, right? I'm kind of rare that somebody would do this, but it's the innovations that CG has pushed and that CG has brought out of its members, various innovations, technology, efficiencies, scalability, mindset, like all of those things are what in the world would keep a pretty seasoned guy, right? What would keep you around for 13 years? And the answer is, it is because the team cares to help your business better. And they are constantly demonstrating processes and theories and vendors and all of that so that you can do your business. And Leon, that is what's kept me around.
Love that answer. You've always given so much to this community, and there are times where I remember, Eddie, you will know, you're like that longtime football coach. Like, you've forgotten more about notes than I'll ever know. But that wisdom is something that you never shy about sharing it, on a pod or in the room. You could tell you're passionate about as much as we're passionate about making sure our members get what they need. You're the same way on the notes side. And if you're somebody that's listening to this and you've never taken this path of understanding creative financing and all the things, like, I can tell you, I have sent people to Eddie, and that's the power of a community with great members that care. I've sent people to Eddie, high level people that could not figure out how to make the numbers pencil. And within minutes, that person called me back and said, thank you so much for getting me in touch with Eddie, because we figured out I'm going to have another call with him. I'm going to have a follow-up. And he already showed me how to make these numbers work. And more importantly, I remember one specific instance. It wasn't on a traditional home that we see a lot of members, trying to do things on creative. It was a commercial deal. And you were helping them pencil the numbers. And so that, there's a reason that the community continues to grow. It's those type of relationships that are built because of members like yourself. And so I can't thank you enough for all the years that you've been with us and all the value that you've given. For those that want to continue this conversation with you, we obviously have the NoteSchool.com /CG. We have that available to them to get in touch with you. Is there another ways they can follow you? That I know you've got an Insta and some social media that they want more information. How do they get a hold of you?
Yeah, they, Note School is kind of going to be the theme that's going to lead them. And so obviously our website, which is fairly robust, is going to give people some contact information. And but yes, we're on YouTube, we're on Instagram. We have a Facebook page of Note School, so you can reach out. It's the Note School, by the way, on Facebook. And you can do all of those things. And once again, that's what we like about being able to, the fact that we want to be able to give your audience something. And if they want something back, there's going to be a good way for them to communicate with us. I want to know more information, want to do whatever. And we want to offer education, but offer it appropriately and not do it in a way that people feel like that they're being pushed, but that there's value there, and that, so it means a lot to us to do it. And Leon, for all the fun, crazy fond memories that I have of CG, for any of the audience that hasn't been there yet, it's been quite a journey.
Yes, it has. And I thank you for all the value. Eddie's a true go-giver. For those that are listening, that is our culture. It's built on that, and what he's put together for you at noteschool.com/CG, I can promise you, is super valuable. And he's not going to hard sell anybody with the information that he gets. He's going to put this resource out there. And if you want to continue down that path, I will say, from knowing this man for as long as I had, that you can't trust someone more with his knowledge and helping you gain that knowledge to continue to grow your business. And also at the same time, most importantly, what you said earlier, helping people get into properties. And it's every real estate investor shouldn't just be doing this for money. They should be doing it for a higher purpose. And so it's all, it all comes full circle with starting, and the best place to start with that is noteschool.com/CG. Eddie, thanks again, my friend, for joining us.
Love you, pal.
New episodes every week. To learn more, visit explorecg.com, where real estate investors come to scale.